Hello, hello, hello. We made it back. We almost didn't make it, but we're here for the earnings. Hope you guys are ready. It's gonna be fun. You gotta love earnings. So we got Intel, Snapchat. Ooh, Snapchat skyrocketed coming into the earnings. I wanted to sell that put, but I obviously didn't come back in time to do it. Probably would have been decent here when it hit below 62. Yeah, that thing was pretty good. What's up, big hippo? My guy. Appreciate you stopping back. Intel crash. We'll see. I should have sold that Snapchat put, though, on the reel. I guess we'll find out if it was a good move or not here in a second. Got some people coming in here. Make sure you hit that like button. It'll help the stream be suggested to other beautiful people like yourselves. Elvis, my man, what's up? How's your day going, bro? Yes, stay hydrated. I need to drink some water, actually. Always a good reminder. What was the Intel? Yeah. I'm not going to do any earnings plays. I would have sold that snap put if I would have came back in time for sure. But I'm not going to touch any of these earnings. Like you're telling me I got to pay like $30 for a 4-point move on Intel. That's pretty out of hand. Like I think it's only pricing in like $2. Oh no, it's pricing in $3. That's not too bad actually. But it expires tomorrow, so that's pretty whack. If I wanted a next week, be paying quite a bit. I guess the August 64 isn't like too bad, but it's probably not hitting that. Damn, AMD 91. CPE. What's CPE? Oh yeah, that's that stock you wanted me to look at yesterday that I didn't look at. That one looks interesting. Throw up the Snapchat. Throw your Snapchats up. Throw your Snapchats up. Florida Georgia Line concert. Bruh, you just made $700 on Doge yesterday. Line concert ain't no $700. I mean, it might be. I don't know. Got about 2 minutes till the market closes. If I wasn't greedy, I was up 1,300. I told you, bro. That's a lie. I actually told you to wait till after the thing. So, I don't know. You're not supposed to listen to me, though. Nothing on stream's financial advice. I thought crypto was honestly going to pop up a little more during that. And then once Elon was off the screen, it would get clapped. But turns out the starting of the stream was the best time. So, I mean, I guess that's how it usually always is. Like when they have the Apple events, Apple will start to run up like the first few minutes of the event, and then it usually dies off. It's usually how it goes, now that I think about it. Everyone gets so excited, and then when they realize the stock's not going to move anymore, they're just like, oh, it's time to sell. Kathy to the moon. Now, Elon wants to go to Mars. I doubt he wants to go to the moon. $15 more seconds. 5, 4, 3, 2, 1. Ding, 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 ding. 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 Oh, Intel popping. Okay. And it dropped. And it popped. Where's that earnings report? Where's the numbers? Damn, Intel popping, bro. I guess those plays would have worked. You were if you got those 57s, you'd be in the money. That's only a $2 move though. It's priced in about $3. I'm really not too surprised. Intel's been a lagger for a long time. But only a $2 pop. That's pretty small, actually, unless it keeps going up. I'm still not even getting the numbers, though, so we'll see if this lasts. I haven't even seen the numbers come through. Intel raising year 2021 guidance. Still not seeing the numbers. They raised their guidance, though, which is good. Let's see if it's on. Oh, there it is. There she is. Intel reports Q2 1.28 versus 1.06 estimate. Revenue $19.6 billion versus $18.0 billion. Guides Q3 1.1 versus 1.08 estimate. Adjusted revenue $19.1 billion versus $18.3 billion estimate. ACES raises fiscal year 2021 4.8 versus 4.62 estimate. Revenues $77.6 billion versus $73.4 billion. Prior was 4.6 EPS and 72.5. So that's some good earnings from Intel. The stock kind of clapped, though. All right, now we got to see Twitter and Snapchat. I'm surprised Intel didn't hold up there. It actually just kind of dropped right as it bounced. 50% beat and the stock goes down. I mean, welcome to the stock market. That's why you don't gamble on this shit. That's why I don't play earnings anymore. There's a reason for it. It's not just earnings already priced in. Yeah, most likely it did already shoot up about $2-3 this whole week. So what's happening with Intel? Intel had good earnings and raised their forward guidance, but it seems their earnings move is already priced in, judging by how it's been performing this whole week, and it didn't really stay up at that level it bounced to. So really good earnings, though, so that's good. Just the stock didn't I mean, it might be a good continuation tomorrow. We'll have to see. But now we need Twitter and Snapchat. Here, I'll throw up another chart for Intel. You were offline. Yeah, I took a break for, oh no, a little bit. And I came back a little bit later than I was expecting to. Now we're still waiting on, we got to do show extended hours. All right, we're still waiting on Snapchat and Twitter. But what's up, Jake? Appreciate you stopping in for the earnings, bro. Getting closer to break even. Nice. Yeah, Twitter and Snapchat might have the exact same move as Intel, honestly. All these stocks have had their move before earnings. We'll have to see, though. Oh, there's Twitter. Little pop on Twitter. Let's see. Where's the numbers? Not seeing any numbers yet. Saturday going tubing down the river. Nice. My girl in a bikini. Bikinis. Damn, Twitter popping. Twitter $75. Ooh. Damn, son. That Twitter, though. The past, it's tanked. I'm surprised Twitter's popping right now. Facebook's getting some steam off of the Twitter earnings as well. I'm really surprised Twitter popped up there. It's crazy you could have bought it for $50 after last earnings. And now we're all the way up here again. Pretty interesting. I'm not seeing the numbers for Twitter, though. Here it is. Twitter Q2 revenue, $1.19 billion versus estimate of $1.07 billion. I'm not seeing the EPS. I think Snapchat had their earnings. Still waiting on the number. Oh, there's Twitter. Twitter Q2 revenue or Q2 EPS 0.2 versus 0.07 estimate. Revenue 1.05 billion versus 1.06 billion. So they actually didn't beat their revenue estimate, but they guided their Q3 revenue 1.22 to 1.3 billion versus 1.17 billion. Guides Q3 could be flat quarter over quarter. I'm actually surprised Twitter's moving off that, but they crushed it on their EPS. That might be a good continuation tomorrow on the downside, possibly. Quite possibly. I think you're getting a little bit of a overreaction on there. And it's, it's reaching up to that pretty key resistance at $80. I don't know. Be careful with that one. Maybe there'll be a good credit spread on there. We'll have to see. Still waiting on Snapchat. I don't know where our Snapchat is. Little baby Snapchat, where are you? Damn, there's 10 people in here. Make sure you guys hit that like button. Appreciate you all stopping in. Hope you're having a blessed day. And if you want to listen to the earnings call, please post in the chat which one you guys would like to check out. I don't know what stock you guys are all here for, but I could throw up an earnings call if there's one you guys are interested in. Where's Snapchat's I'm not seeing the numbers on Snapchat. Snap had the move. Where's the numbers? Where the numbers at? I don't see no numbers. Where you at, Snapchat? Let's see if it's in this. Yeah, I'm not seeing Snapchat numbers yet. A lot of upgrades on Snapchat. The stock's moving, though. Just not getting the numbers. Woo, Snapchat, bro. Where are these numbers? It's a pretty small move for Snapchat, though. They were pricing in a lot more than that. Twitter was pricing, the Twitter move is really small, too. They were pricing in about $6, $7. Well, I guess they did hit that $6 mark, but then they just dropped. Damn, Snapchat, bro. Snapchat was pricing in about $5. Man, we could have played that put on Snapchat, or that put sell. Would have been nice. Where's the numbers, though? I ain't seeing the numbers. Let's see. Snapchat sees oh, here it is. Right as I find it on the news. Snap Q2 revenue, $982.1 million, estimated $846.9 million. I'm not seeing the EPS, but it's right here. Daily active users up 23%. Adjusted EPS is 10 cents versus negative 0.02. Damn, Snapchat killed their earnings. Woo! Snapchat fucking slaughtered their earnings, bro. Damn. Snapchat? Look at the Snapchat, bro. That's crazy. Man. Snapchat went right back up to $70. How's Intel? Intel's earnings were good, but the stock, not so much. Snapchat was your star on the day. Snapchat slayed it. So I guess we're going to watch Snapchat earnings call, depending when it is. I mean, that's the star, so we might as well check that one out. Intel's earnings call could probably be pretty interesting, but I'm interested in the Snapchat one. Because that's big. That's some big earnings for Snapchat. $2 p.m. Pacific. When's that? 2 p.m. Pacific. Oh, Snapchat's earnings call is not for like an hour. Let's see when Intel's is. This one's not giving me the time. Oh, Intel's at the exact same time as Snapchat, so that's inconvenient. And Twitter's is in about 2 hours, so we could probably watch Snapchat's or Intel's, and then maybe even catch the Twitter one as well. All right, Jake, much love, bro. Have a good day. Yeah, Intel's coming down a little bit, which is really surprising. I mean, their earnings was really good, and they gave better guidance. Freaking Snapchat, though, dude. That's impressive. Very impressive. Facebook's getting some steam off that, too. Let's see. There's a couple other ones. Boom. DMC Global. Moved a little bit. I don't know what that is, though. CLFD. Clearfield. KX. Skechers. I didn't even know Skechers had a stock. They're killing it. Damn. Wow. I don't think this is like Skechers shoes. If it is, they're doing pretty well. Dude, Snapchat, though. Man. Frickin' Snapchat did it again. They did it again, bro. Best earnings they've had ever. That's beautiful. Make sure you guys hit that like button if you have not. Appreciate you all stopping in. I don't even know. I wonder, let's see if there's even any plays you could have got on Snapchat. Because they were pricing in about $5. Yeah, you would have to pay like $100 to even get a 70 call on Snapchat. Even the one that expires tomorrow is $60. That's pretty crazy. That's pretty out of hand for a earnings play. The put sells were dope though. Like they had a lot of put sells that were pretty good. I wanted that 57.5. That was a $100 put sell earlier in the day, but I just didn't end up doing it. And oh well, I mean, doesn't really matter. Miss out on plays all the time, so it's not really like that big of a deal. It's cool to see Snapchat killing it though. That's what I can say. Very cool. Snapchat, I don't know. Snapchat should be a good continuation play tomorrow, I feel like, especially if it breaks like well above this $70 level. That's a really key resistance level for Snapchat. Dude, look at this thing. Woo! You crazy, Snapchat. You crazy, bro. That's insanity. I can't believe it. Almost doubled the move. You crazy, Snapchat. Facebook getting that steam. Shit, Facebook's getting some steam off of that too. That's what I like to see. I mean, at least we got shares of Facebook. That's always good. That's working for us. We got that exposure. So, yeah. That's pretty much your earnings. We will be listening to the Snapchat earnings call when it comes out here in about 40 minutes. That's crazy, bro. I had a feeling Snapchat was going to fucking kill it. There was just no option plays you could have done. Unless you were like super far out of the money, but you only had like a week of time. Or you played the ones that expire tomorrow, which usually isn't good. I don't know. Killer earnings though. Poor Intel, had really good earnings and just got clapped. Poor Intel. Nobody cares about Intel. It's like, huh? You see that Snapchat? Who needs Intel when you see that Snapchat going like that? Make sure you guys hit that like button if you have not. Much love. Dude, this thing's still going. It's about to hit 72. Woo. Snapchat, bro. Dude, if oh my gosh, it just broke the 72. 72 is the all-time high, I believe. So you're hitting all-time highs on Snapchat. That's incredible. Quite incredible. $73.59. Oh. I thought 72. I don't fucking know. Oh yeah, it is 73.59. You right. That's crazy. All right. Got about 40 minutes, and then, I guess we'll just watch the Snapchat earnings call. It's definitely the winner. Winner, winner, winner. Damn it. Intel was a funny troll. Hey, I mean, you got what you wanted. I'm just going to stick around, throw up the earnings call when it comes out, hang out. Damn, Google just hit 2,600? Okay. Okay, Google. I see you. I see you. That's wild, bro. Crazy earnings. We got one dislike. Looks like one person went short on Snapchat. Poor guy. Poor guy. It's okay. We still love you. All right. Let me find these Snapchat earnings call. Please log in a few minutes before the start of the event. Oh, we got to wait a little bit here. Won't even let me put in my info. Got about 30 minutes till the Snapchat earnings call. If you want to stick around here, I appreciate you. If not, I appreciate you stopping in. Much love. Hope you have a blessed rest of your day. But we'll be sticking around here, hanging out. That's crazy, bro. I can't believe Snapchat. That's so insane. Thoroughly impressed. Like, I knew I had the feeling they were going to report positive earnings. But I didn't know they were going to beat it like that. Bass Boost Vivo. It's been a long time, bro. Hope you're doing good. Bass Boost. What it do? Just the same shit, bro. Just on the grind. Fucking, you know. Living it up. Took a break from the market. Why is that? Any reason? Ooh. Facebook 360. Damn, Facebook is skyrocketing. They didn't even have earnings. Tired thinking about it 24/7. So yeah, amen. Long term. So I'm trying to tell everyone, bro. When the market's stressing you out, you got that long term. My guy. That's what I'm talking about. I feel you, though. That's why once the stream's over, I don't even think about the market. I don't really talk about it. If people try to talk to me about it, I'm like, I stream the stock market 7 hours a day. If you wanna come talk about the stock market, that's the place to go. Once the stream's over, the stocks don't exist in my mind. Sometimes I'll watch futures like at night, but I'm never really like, oh, I gotta make this play. Oh, I got clapped on this play. Like, nah, fuck that. There's no point in stressing that out. Like, just go with the flow. The market should be enjoyable. If you're not enjoying it, then I don't know why you're here, you know? But there's nothing wrong with that, bro. Taking a break's good. And like you said, you got the long term, so you have really nothing to worry about. You can just come on here, you know, buy some shares, go work, save up some money, check back in like a week or two, see what's going on. But, dude, Facebook is going so ham. They didn't even have earnings. Facebook is fucking Facebook, bro. Facebook's hitting all-time highs. What the hell? Like I was break even on the day, and now Facebook's just carrying my whole account after hours. Like that, what the fuck, bro? What the hell, Facebook? Facebook's like, Snapchat doubled their growth and revenue. I think I could do the same. I'm just kidding. They only grew. Snapchat only their growth was like 23% or something, but their revenue destroyed. So what you been up to, Bass Boost, since you haven't been paying attention to this? SCKT Socket Mobile. This thing is going ham too. What the hell? College summer classes, photography, nice. That's dope, bro. Get a network, talk to some ladies. Girls love photography. Be like, hey girl, you looking cute. Let me get a little snap. And not a Snapchat, but a snap. No cap. That's dope, bro. Summertime, the living's easy. That's dope, though. What are you getting your degree in? Do you have an idea, or are you just doing like what is it called? I think it's the general education. Show them my portfolio, they go crazy. Be careful with that. You don't want the girls that be going crazy off the portfolio. You want the girl that has her own portfolio, you know? Know what I'm saying? If she ain't got her own portfolio, you gotta be careful. Or who knows, maybe you could teach them how to build a portfolio. There you go. Find someone who's interested in it, that's not just trying to buy GameStop or Neuro. Oh, shit. I bet that's fun, though. I took a photography class in college. That shit was a blast. You got about 20 minutes till the Snapchat earnings call. Appreciate everyone who's sticking around. They're still not letting me sign into the webcast yet. Hopefully soon. I wouldn't be surprised to see the stock move more during the earnings call, especially after that. Dude, that revenue beat. That is just crazy, dude. Poor Intel, though. Intel getting clapped. Twitter's falling off, too. Very interesting. Damn. Intel don't look so hot. That's wild, too, because Intel had pretty damn good earnings. Alright, for sure, base boost. Hopefully we see you again soon. Have a blessed rest of your day. Much love. Whoa, Boston Beer got fucking slaughtered, bro. Boston Beer is down $150. What? What the hell? Anheuser-Busch didn't really react off of that. But that's crazy. I want to see, what did Boston Beer report? That's huge. Let's see, Boston Beer, 603 million versus 656 million estimated. EPS 4.75 versus Boston Beer had shit earnings, bro. If that's correct. I don't know if that was the legitimate earnings. I'm not seeing it. Those are all 4 hours ago. It's not going to be any of those. EPS 18 to 22 versus 25.4 estimate. I'm not seeing the actual numbers on SAM, so if anyone has that, please post it in the chat. That thing is getting slapped up, though. Damn, poor Intel, bro. Intel might break new lows. That's sus. Suspect. I guess people didn't like the guidance. They wanted more. Make sure you hit that like button if you have not. We got the Snapchat earnings call in about 15 minutes. Bro. Intel is getting so destroyed. So sad, so sad. Same with Sam. Smash that like button. Amen, amen. For sure hit that like button. It'll help other beautiful people to, find the channel. Or get suggested the video. Or stream, I mean. Let me see if it'll let me sign into the earnings call yet. Ah, there we are. Market is doing tomorrow. I wouldn't be surprised if we frickin' slay it tomorrow, especially after how much Facebook's running up. You're getting the futures skyrocketing after hours. We might see all-time highs. Probably a gap up, honestly. If we don't gap up, might be a good time to trade the SPY tomorrow. We'll see, though. We're most likely going to gap up in the morning, though, I would assume. Then where we go from there. Oh, what beautiful music. Dang, this thing's huge. All right. Pulling up the conference call. Holy crap. Here, let's scroll that up a little bit. Do that. Got about 10 minutes till the earnings call here. They're just playing some nice classical music for your enjoyment, I guess. Holy. Maybe we'll see Intel bounce back up a little bit during their earnings call. Their earnings call is the same exact time as Snapchat's, though, so I don't know. We'll see. We're not going to be listening to that one. I'd rather listen to the Snapchat one, personally. $1,500 gross a week medium wage in Utah. I have no clue. You asked me this once before, and yearly was like 50 or 70. I don't remember, bro. You're going to just have to Google it. I really don't know. I feel like $1,500 a week is good as fuck, though. Honestly. Why do you ask? Live in a small ass apartment on my wages there. No way. You'd be able to get a nice house. Your mortgage would be like $2,000 a month. You could you could probably get a really nice house for like $3,000 a month. $1,500 gross, $4K take home, $1,500K mortgage, rest for living costs. I mean, you're better off buying a house here than you are renting. Renting is pretty much more expensive than owning. Like you can find some apartments for depending how nice you want, I would say anywhere from like $900 to $1,500. Unless you're trying to get real bougie, you could probably get $2,000, something like that. But in my opinion, you're better off just getting a house, because like I said, your mortgage would probably be like $2,000 max for a 3-4 bedroom house, 2-3 baths, like pretty nice house. And then, I mean, maybe you wouldn't be able to invest as much in the market, but if you have a house, I mean, does it really matter? You get pretty much the same type of growth in real estate as you do investing in the S&P. All right, this earnings call should be starting here shortly. Oh, 2-bedroom apartment versus 2-bedroom apartment. 2-bedroom apartment would probably be like I said, depending how nice you want, I would say like $1,200 to $1,500, maybe. I honestly haven't looked at rents in a long time, so they could be more, could be less. I would assume around that range, though. Like if you want decently nice. All right, this earnings call should be coming up. Once the earnings call's on, I'm just gonna leave it going for you guys. Then you don't have to listen to my annoying voice. So I take $4K a month, only standard bills, $1K usually, $500 for food, $300 for gas, $700. Why don't you get like a rental property or something? Have you ever thought about that? Like, do you know people that are renting an apartment right now that are like overpaying, That, I mean, if you want to have people in it, you wouldn't really, you could do that. or you could just rent it out to someone random. Make sure you get a good background check. I mean, you could just hire a property manager. Property manager would probably be pretty cheap. Working on a $20K emergency fund. I mean, run it. But I don't know. You have your investments though. Like, do you really need $20K cash? You know, like if you really needed $20K, you could just pull it out of spot or your VOO. Like, you know, like cash really. I don't know. I just personally don't see cash as very valuable, you know? Like as long as you got enough money to last you for like 6 months or something. I mean, even then, like if you have your cash in investments, like it's so easy to become liquid. So, I don't know. Maybe consider getting a rental or just keep investing. Like either way. Just an insurance policy. I feel you. But if you get a rental property, you know, that's another asset. You're going to be having extra income coming in. Yeah, you're going to have a mortgage, but if you're having someone pay your mortgage, it's not really a big deal. Plus you'd probably be making like $500 extra as well every single month. 20K emergency fund in silver. Nah, don't do that. Like if anything, just put it in the S&P. All right. Here's the we'll talk about this later, Elvis, but here's the Snapchat earnings call. Much love to everyone. God bless you.
During that time, please press star, then the number 1 on your telephone keypad. This call will be recorded. Thank you very much. Betsy Frank, Senior Director of Investor Relations, you may begin.
Thank you, and good afternoon, everyone. Welcome to Snap's second quarter 2021 earnings conference call. With us today are Evan Spiegel, Chief Executive Officer and Co-founder, Jeremy Gorman, Chief Business Officer, and Derek Anderson, Chief Financial Officer. Please refer to our investor relations website at investor.snap.com to find today's press release, slides, a copy of our prepared remarks, and our updated investor presentation. This conference call includes forward-looking statements which are based on our assumptions as of today. Actual results may differ materially from those expressed in these forward-looking statements, and we make no obligation to update our disclosures. For more information about factors that may cause actual results to differ materially from forward-looking statements, please refer to the press release we issued today, as well as risks described in our most recent Form 10-Q, particularly in the section titled Risk Factors. Today's call will include both GAAP and non-GAAP measures. Reconciliations between the two can be found in today's press release. Please note that when we discuss all of our expense figures, they will exclude stock-based compensation and related payroll taxes, as well as depreciation and amortization and non-recurring charges. Please refer to our filings with the SEC to understand how we calculate any of the metrics discussed on today's call. With that, I'd like to turn the call over to Evan.
Thank you all for joining us today. Our second quarter results reflect the broad-based strength of our business and the hard work of our team as we execute to serve our community and partners. This quarter, we grew both revenue and daily active users at the highest rates we have achieved in the last 4 years. Daily active users grew 23% year over year to 293 million, and we more than doubled revenue year over year to 982 million, generating 117 million in adjusted EBITDA. Adjusted EBITDA improved by $213 million compared to last year, marking our third adjusted EBITDA profitable quarter in the last 12 months, as we continue to demonstrate the leverage in our business as we scale. At our annual Partner Summit in May, we introduced new product innovations for our community and partners, including the next generation of Spectacles augmented reality glasses that overlay computing on the world. And we are excited by the tremendous opportunity for our business in 2021 and beyond. We made significant progress with our augmented reality platform this quarter. More than 200 million Snapchatters engage with AR every day on average, and over 200,000 creators use Lens Studio to build AR lenses for our community. We are focused on learning from our large and engaged community of Snapchatters and creators, which allows us to continually improve our AR lenses and the tools we provide to create them in Lens Studio. This quarter, our cartoon 3D style lens, which uses machine learning to turn people into a 3D animated cartoon in real time, highlighted the power of lenses to go viral both inside and outside of Snapchat. In the first week of release, it generated 2.8 billion impressions on Snapchat alone. We rolled out Lens Studio 4.0 at our Partner Summit with new features like visual classification, multi-person 3D body mesh, advanced cloth simulation, true size technology for eyewear try-on, and the new visual effects editor, which enables creators to build sophisticated lenses without writing any code. We also launched connected lenses, which enables real-time shared experiences in augmented reality, like building a Lego model together with your friends. We are continuing to create value for businesses by reimagining the shopping experience through AR. By leveraging the long-term investments we've made in augmented reality and personalization, we are laying the groundwork for an improved online shopping experience. For example, we are making it easier to discover new fashion items through Scan by helping Snapchatters scan a friend's outfit or a saved photo or screenshot to shop similar looks and recommendations. When it comes to purchases and returns, we believe that helping people find the right size and improving the try-on experience could both increase conversion rates for purchases as well as reduce the rate of returns for online shopping. We are excited about this opportunity because returned goods cost businesses hundreds of billions of dollars each year and have a large environmental impact. We are pleased with our early progress in this space and look forward to experimenting and learning more with our retail and e-commerce partners. We are also collaborating with a variety of partners to power AR experiences in their own applications with Camera Kit, which brings the power of the Snapchat camera to partner applications using our SDK. This quarter, we rolled out a number of Camera Kit partnerships worldwide, including with Walt Disney World. We'll commemorate their 50th anniversary with an AR experience where visitors can place their own picture on Cinderella's castle to create a virtual mosaic of shared moments, as well as access exclusive AR lenses with Disney characters through the My Disney Experience app. We also partnered with Bumble and Viber to bring lenses to their respective mobile apps, and are working with Google to bring our lenses directly to the new Jio phone in India with a native camera integration. We announced our next generation of Spectacles at our Partner Summit, which are available exclusively for creators. They are our first device with a built-in 3D augmented reality display and represent another step forward toward our goal of overlaying computing on the world. We are investing heavily in augmented reality across Snapchat, Camera Kit, and Spectacles, and we are excited to continue learning and making progress toward our long-term vision. We also announced a number of new products and partnerships at our Partner Summit for maps, minis, and games. We are adding layers to the Snap Map so that Snapchatters can find personalized local experiences from our partners overlaid directly on the map. For example, users will be able to see restaurant recommendations from the infatuation or their own saved snaps from memories on the map. We are also expanding our Minis platform, including a new Mini featuring daily shopping events hosted by Poshmark. Ticketmaster is partnering with us across a few of these products, with a mini where you and your friends can discover different artists and shows and buy tickets, which also integrates directly with the Ticketmaster layer on our map that overlays different concerts and events directly on the Snap map. We are adding new titles and genres to Snap Games, with Voodoo launching 5 new games to Snapchat this year. We have learned that players who use their Bitmoji in a game spend twice as much time playing, which is one reason Unity is bringing 3D Bitmoji into their mobile, PC, and console games with our new Unity plugin. We have observed a number of changes in content engagement as we evolve our content products and manage through the mixed impacts of the pandemic. For example, global time spent watching content on Snap grew year over year, while lapping the boost in engagement we saw at the onset of the COVID-19 pandemic. But we have also observed a year-over-year decrease in daily time spent watching user-generated stories created by friends, even as the number of daily viewers of that content has grown year over year. We believe this is due in part to a decline in the volume of daily story posting activity on Snapchat, coinciding with mobility restrictions and behaviors related to the COVID-19 pandemic, which reduces the amount of content created by friends that is available to watch. While it is unclear when these restrictions will end and how user behavior will evolve, we are seeing stabilization and early recovery in story posting as some communities are reopening and reducing restrictions. And we are cautiously optimistic that this will lead to increased time spent watching stories from friends as the world begins to open up. Meanwhile, we are continuing to evolve our overall content products and business. As we learn more about the different types of content that our community wants to watch and that drives successful outcomes for our partners, we are doubling down on what is working well. Based on these learnings, we are adapting and expanding our content offerings from both our media partners and our creator community in order to appeal to the diverse variety of interests of our community. For example, shows are seeing ongoing success on our platform, and we aired 8 new Snap Original shows this quarter. Many of our partners reach a broad audience through several different channels, and 9 different partners reach more than 30 million unique Snapchatters in the United States alone. We added 177 new international Discover channels this quarter to support our international growth strategy and deepen engagement. For example, total daily time spent by Snapchatters in India watching shows and publisher content increased by 150% year over year. Additionally, we are seeing early promise in showcasing the best and most entertaining snaps from our community on Spotlight. While we are still in the early phases of launch and iteration, we are excited about our learnings and progress so far. Engagement is growing rapidly as we roll out Spotlight worldwide, with Spotlight DAU growing 49% quarter over quarter, and average daily content submissions more than tripling when compared to the prior quarter. We are also seeing time spent growing rapidly, with daily time spent per user on Spotlight in the United States growing more than 60% in the last quarter, giving us additional confidence in our ability to build Spotlight into a meaningful business over time. There is still a lot of work to do as we build out Spotlight and innovate to improve the product experience. For viewers, we are adding new features like the trending page while improving personalization and ranking in order to show the right content to the right people based on their engagement and interests. For creators, we are making it easier to create compelling content using creative tools in our camera. And we launched Creative Kit for Spotlight so that creators can easily create and submit videos to Spotlight from applications like Voisey, BeatLeap, and VideoLeap. We signed deals with Universal Music Group, Sony ATV, and DistroKid in the first half of 2021 to increase the availability of sounds on our platform and to help our community discover new artists. We are also helping creators monetize and develop relationships with members of our community through products like gifting, our creator marketplace, and by supporting them directly through our creator fund, which we are continuing to evolve as we move beyond our initial launch. While we are still very early on this journey, we are excited about our ongoing work with Spotlight to help our community discover new content and creators while also supporting our global creator community. We've now spent over a year working from home, and we have learned so much as a team about how to execute remotely while continuing to deliver rapid product innovation. While we are excited to see each other in person after all this time, we are also planning to retain many of the behaviors and practices we developed during the pandemic so that we can continue benefiting from the flexibility of being able to work and collaborate remotely. This new way of working has brought us closer together as a team and helped us to work more effectively as a global business with team members and partners located around the world. I am deeply grateful for the resilience of our team during such a difficult period, and I'm optimistic about the progress we are continuing to make in growing our company. Now I'd like to turn the call over to Jeremy to share more about our business.
Thanks, Evan. We're pleased with our results this quarter and believe our business is well positioned for the future. In Q2, we generated total revenue of $982 million, an increase of 116% year over year, reflecting the momentum in our advertising business and the hard work of our team serving our partners and helping them generate return on their investment. We benefited from a favorable operating environment and continued success with both direct response and large brand advertisers. And we continue to leverage our performant ad products to grow our advertiser base globally. We are fully focused on making progress against our revenue and ARPU opportunities, which we believe will be driven by three key priorities. First, driving ROI through measurement, ranking, and optimization. Second, investing in our sales and marketing functions by continuing to train, hire, and build for scale. And third, building innovative ad experiences around video and augmented reality with a focus on shopping and commerce. Our commitment to these three priorities, along with our unique reach and large engaged community, allows us to drive performance at scale for businesses around the world. We believe all advertisers optimize for driving ROI and measuring performance. We have accelerated our efforts to drive ROI for our advertising partners via lower funnel bidding capabilities, which allow advertisers to optimize for the objectives they are trying to achieve, and our innovative ad units, which are tailored for the most sophisticated performance advertisers. For example, Booking.com employed a strategy that used dynamic ads to reach new customers on Snapchat. By utilizing our dynamic ad solution for travel, they were able to dynamically pull images directly from their product catalog that displayed relevant and visually appealing destination photos and features. This helped Booking.com unlock an incremental audience within the United States, which resulted in a positive incremental lift in bookings across both their website and their app, and delivered a cost per incremental booking of approximately 36% lower than their goal. Our ad platform is being utilized as an effective self-service tool to help advertisers of all types and sizes create, manage, and measure campaigns on Snapchat. Further, it is a reflection of our focus on privacy and innovation as we are delivering results for advertisers while also respecting the privacy of our community, which has been a core tenet since we launched ads on Snapchat. This year has clearly demonstrated how important it is to simultaneously meet these two objectives for our advertising partners. As Apple rolled out its app tracking transparency-related changes near the end of Q2, we observed higher opt-in rates than we are seeing reported generally across the industry, which we believe is due in part to the trust our community has in our products and our business. Apple's rollout of the most recent iOS update came later in Q2 than initially anticipated, and the pace of updates by iPhone users has also been slower than we anticipated. This has given us more time with advertisers to navigate the transition, but also means the effects of these changes will come later than we initially expected. We continue to work with our advertising partners on privacy-safe solutions and other attribution techniques. For example, we fully rolled out support of SKAdNetwork version 3.0, which we believe will aid in improving attribution for advertisers who have implemented Apple's API. We also launched Advanced Conversions in Ads Manager, which allows advertisers to measure their campaigns via our privacy-protecting measurement stack. We are dedicated to delivering value for our advertising partners while respecting the privacy of our community, as we have worked to do for many years. That said, it remains very early in the adoption of the iOS platform changes, and we will continue to learn how these changes may impact our advertising partners, business, and the industry as a whole. We are seeing some initial signals as advertisers test and learn in this new environment, and this is causing some interruptions to demand that we had anticipated would be part of the adoption process, particularly in the direct response, e-commerce, and gaming sectors. It is too early to determine how long it will take until these changes are fully adopted, the scale of potential interruptions to demand, or the ultimate impact on the longer-term growth of our business. We have proven through our efforts in North America that with a robust team, surrounding resources, and a local focus, we can accelerate revenue. We are now taking that model and replicating it in several markets that we have identified as having a large digital advertising market and significant levels of existing Snapchat adoption. We have a lot of room to grow in some of the world's most established ad markets outside of North America, especially in Europe. For example, in the UK, France, and the Netherlands, we reach over 90% of 13 to 24-year-olds and 75% of 13 to 34-year-olds. We will continue to make progress on hiring and investing in our team globally across sales, marketing, and partnerships, among many others, as we believe this investment will position us well to grow our business over the long term. We continue to invest heavily in video advertising with the goal of driving results for our advertising partners and connecting them to the Snapchat generation. For example, we worked with Nielsen to help U.S. advertisers understand how to more efficiently reach their target audiences via Snap Ads. The Total Ad Rating study analyzed how over 30 cross-platform advertising campaigns reached people on both Snapchat and television. The analysis showed that Snapchat campaigns contributed an average of 16% incremental reach to advertisers' target audiences, and over 70% of the Gen Z audience that was reached by Snapchat was not reached by TV-only campaigns. This is especially important as people are increasingly cutting the cord and mobile content consumption continues to grow, presenting us with a large opportunity to help advertisers reach the Snapchat generation at scale. Augmented reality advertising is delivering a return on investment that is measurable and repeatable, which is encouraging more and more businesses to invest in AR. For example, Smile Direct Club leveraged our goal-based bidding click optimization for AR, which drove 49% of Snap customer leads in Q2 and was the most effective ad unit at driving traffic for their business compared to other social channels. The success of the lens ultimately encouraged Smile Direct Club to include AR lenses as part of their long-term business strategy. We are doubling down on our efforts to help advertisers improve conversions and ROI, and recently launched our GBB purchase optimization for AR, which allows advertisers to optimize their AR campaigns for down-funnel purchases and fits well into our shopping strategy. We continue to roll out a number of products and features to help empower AR commerce on Snapchat. We recently launched public profiles for all businesses, which give businesses of all sizes a free, permanent home on Snapchat where they can highlight engaging content, showcase compelling AR experiences even after a campaign is finished, and share shoppable products directly within the app. Public profiles allow brands to build a direct relationship with our community, and we are already seeing some of the largest brands investing in their profile. For example, Nike leveraged our AR lenses as part of its Play New campaign to encourage Snapchatters to get active, and the company is planning to build additional lenses for its public profile. In addition, at our partner summit in May, we launched unique new try-on capabilities, such as wrist tracking technology for watches and jewelry, and true size technology for eyewear, which complement our existing foot tracking technology and are all designed to give Snapchatters more confidence in the ability for AR try-on to emulate a physical shopping experience. For example, watchmaker Piaget is using wrist tracking technology to make it possible to try on a variety of different timepieces, and businesses like Zenni Optical are using our true size technology to help Snapchatters find frames that fit them perfectly. Through new 3D body mesh capabilities, retailers now have the ability to showcase products realistically on the body. This has come to life for brands like Prada that created a bag try-on experience for Snapchatters to shop directly in the camera. Additionally, brands like Farfetch are tapping into these technologies to allow our community to try on and shop a variety of jackets from its catalog. All of these technologies and more are available in Lens Studio for the world's leading creators and agencies. We also recently built a new AR beauty template in Lens Web Builder, which allows beauty brands to upload their entire catalog and publish AR lenses quickly and in a cost-effective manner. For example, e.l.f. Cosmetics is able to pull in many of their 800 product SKUs to create unique makeup try-on experiences, and with the lenses they've built thus far, are already seeing Snapchatters engage with their products in new ways. We are in the process of onboarding hundreds of emerging Gen Z-focused beauty brands who will be able to leverage this technology for their AR campaigns. We have a lot more work ahead to build out our technology and increase AR adoption, but we are thrilled with the results that our partners are seeing as we invest in our long-term camera opportunity. When brands utilize a portfolio approach of combining sponsored AR lenses with Snap ads, they result in higher ROI and lower cost per outcome. For example, global sports streaming service DAZN launched a multi-product campaign that utilized AR lenses, Snap ads, story ads, and commercials in order to drive awareness for its live sports channels, installs for its apps, and subscriptions for its streaming service. DAZN leveraged our new GBB app install optimization for AR, which not only drove incremental installs, but also reached millions of unique Snapchatters. The overall campaign resulted in lists and installs and subscriptions and drove incremental Snapchatters to its platform, ultimately reinforcing the value of leveraging
our community, investments in the future of our business, and scaling our operation efficiently in order to drive towards profitability and positive free cash flow. As Evan mentioned earlier, our community grew to 293 million daily active users in Q2, an increase of 55 million or 23% year over year. The growth in our community continues to be broad-based, with year over year and sequential growth on both iOS and Android platforms. In North America, DAU grew by 5 million or 6% year over year to reach 95 million. In Europe, DAU grew by 7 million or 10% year over year to reach 78 million. In rest of world, DAU grew by 43 million or 55% year over year to reach 120 million. The continued robust growth in rest of world reflects the benefit of our ongoing investments in local content, local language support, marketing partnerships, and the popularity of augmented reality lenses created by our global community. Total revenue for Q2 was $982 million, an increase of 116% year over year as we lagged quarter in the prior year where the pandemic most significantly impacted advertising demand. We benefited from an improved operating environment in Q2 and strong momentum with our advertising products and partners. In addition, the iOS platform policy changes that we anticipated could disrupt advertising demand in Q2 of this year did not materialize as expected in Q2, as the changes were rolled out later and adoption occurred at a slower than expected pace. In North America, revenue grew 129% year over year in Q2, while ARPU grew 116% year over year as we continue to benefit from the significant investments we made in our sales teams and sales support in the prior year. In Europe, revenue grew 94% year over year in Q2, while ARPU grew 76% year over year. In rest of world, revenue grew 86% year over year in Q2, while ARPU grew 20% year over year. As indicated in the prior quarter, we are continuing to accelerate our investments in sales and sales support beyond North America in order to capture our global ARPU opportunity faster in the years ahead. Average eCPM increased 122% year over year in Q2. Rising eCPM relative to the prior year reflects the rapid rise in overall demand, improved optimization capabilities within our auction, a mix shift towards relatively higher eCPM products, as well as a mix shift towards relatively higher eCPM regions, such as North America. Dynamic ads are a great example of an ad product where we are seeing the power of product innovation and auction optimization to deliver return on ad spend while achieving relatively higher yields for our inventory, with revenue from dynamic ads more than doubling sequentially. With the rapid rise in total revenue of 116% year over year and 28% sequentially, the rate of growth and demand outpaced the rate of new optimizations delivered in the quarter, and we observed sequential increases in cost per action for our goal-based bidding products in the quarter as a result. We continue to invest heavily in our teams and tools to continually enhance our optimization capabilities over time, and this is a top priority as we seek to deliver attractive returns on advertising spend for our advertising partners over the long term. In addition, the ongoing growth of our community, and strong engagement in areas of our application that we have not yet begun to monetize provide us with the opportunity to expand our inventory and grow our long-term ARPU opportunity over time. Gross margins were 55% in Q2, an increase of approximately 9 percentage points year over year and 8 percentage points sequentially. We continue to make significant progress against our goal of driving down our underlying infrastructure unit costs over time. In Q2, we continued to benefit from several recent efficiency improvements delivered by our engineering teams, as well as negotiated rate improvements for several of our cloud services. In addition, the acceleration and growth of our community has been a modest benefit to infrastructure cost per DAU in recent quarters, as new users tend to have lower initial marginal cloud infrastructure costs relative to longer tenured Snapchatters. These factors combine to deliver infrastructure cost per DAU of 62 cents in Q2, which was consistent with the prior quarter and down from 69 cents in the prior year. On the content side, we continue to invest to support the launch of Spotlight in Q2, and this contributed approximately $76 million to our cost of revenue in the quarter, which is a modest sequential decline in cost as we continue to evolve the cost structure for this program to promote more content diversity by rewarding top-performing content creators while also seeding new content categories. We are pleased with our progress on this front, as we've observed all-time highs in daily submissions after making these changes to the incentive program. We also continue to be highly encouraged by the early returns from our investments in Spotlight, with daily time spent per user on Spotlight in the US growing more than 60% in the last quarter. While it is still very early for this new platform, we are excited about the potential for Spotlight to further expand our monetization opportunity in the future. We are particularly pleased that we have been able to continue to invest in Spotlight and Discover while expanding our gross margins year over year, which reflects our overall approach of scaling our operations efficiently over time while making investments in the future of our business. Operating expenses were $427 million in Q2, up 39% year over year. As we anticipated last quarter, our rate of hiring stepped up in Q2, and the growth in employee-related costs was the single largest driver of growth in operating expenses in Q2. Total employee-related costs, which represent more than 60% of operating expenses, were up 35% year over year, driven by a 31% increase in full-time headcount that reflects the ongoing investments in our team, as well as the integration of recent acquisitions, which contributed approximately 8 percentage points to the year-over-year growth in full-time headcount in Q2. We have also continued to invest in marketing to build on the momentum we have established with our advertising partners and in our community, with growth in these investment areas contributing in part to the growth in overall operating costs. As we anticipated last quarter, we are also beginning to see certain costs returning to our cost structure that were significantly diminished due to the pandemic-related restrictions over the past year, including travel and event-related costs, among others. The partial return of these costs to our cost structure in Q2 was an additional factor driving the acceleration in the rate of expense growth in the quarter. Adjusted EBITDA was $117 million in Q2, an improvement of $213 million year over year as we continue to grow our top line rapidly while scaling our cost structure efficiently. We delivered adjusted EBITDA leverage of 40% in Q2 as we continue to invest in the future of our business while making progress towards sustained profitability and positive free cash flow. Net income was negative $152 million in Q2, an improvement of $174 million over the prior year, and representing net income leverage of 33% as we continue to make progress towards achieving profitability and sustained positive free cash flow generation. The year-over-year improvement in net income primarily reflects the flow-through of the $213 million improvement in adjusted EBITDA, as well as $80 million higher net gains on investments in the quarter. This was partially offset by $88 million higher stock-based compensation, driven by several factors, including approximately $43 million attributable to growth in our team due to hiring over the past year, $25 million driven by higher payroll taxes due to our higher stock price, and $13 million related to long-term retention associated with several acquisitions completed in the last year. While we have continued to grow our team and leverage stock-based compensation strategically to foster an ownership culture and drive long-term retention, we have remained focused on managing these programs responsibly. Total fully diluted shares outstanding grew 4% year over year in Q2. However, excluding the shares we issued in exchange for early conversion of approximately $840 million of our convertible notes, the rate of growth in shares outstanding was just 1.7% year over year, down from 2.6% in the prior quarter and below the 3% estimate we shared during our recent Investor Day that was noted to be exclusive of any dilution related to convertible notes. Free cash flow for Q2 was negative $116 million, or $33 million unfavorable versus the prior year. This was driven primarily by a $233 million increase in net working capital, driven by the rapid sequential and year-over-year growth in revenue that was partially offset by improvements in our cash conversion cycle, including an approximately 2-day reduction in our days sales outstanding metric, which reflects our broader initiative to scale our operations efficiently. The impact of top-line growth on our net working capital position was largely offset by the $213 million improvement in adjusted EBITDA noted earlier. We ended the quarter with $3.5 billion in cash and marketable securities, up from $2.8 billion in the prior year, as the proceeds of convertible notes issued over the past year more than offset the investments we have made to grow the business over the past year. As we look forward to Q3, we are observing a resurgence of COVID-19 cases and the ongoing impact of the pandemic around the world, which continues to present an uncertain operating environment. We currently estimate the DAU will grow at a rate of approximately 21% year over year to reach approximately 301 million in Q3. On the monetization side, we note that the comparisons will be more challenging in the second half as we begin to lap the acceleration in top-line growth that we experienced in the prior year. Our guidance range is for year-over-year revenue growth of approximately 58% to 60% in Q3. This range reflects our best current estimate of the potential impact of anticipated disruptions associated with the iOS platform changes. As I mentioned earlier, the iOS platform changes have been adopted more slowly than we had anticipated, and the interruptions to demand are therefore expected to come later than we initially anticipated. As a result, it is still not clear what the longer-term impact of the iOS platform changes may be, and this may not be clear until at least several months or more after the changes are fully implemented. Until then, we remain focused on helping our partners navigate these changes while optimizing return on ad spend across our advertising products and platform. On the expense side, in Q3, we intend to continue to invest in the long-term growth of our business in order to build on the momentum we have established with our community, our partners, and our top-line growth. In addition, we expect to continue to see certain costs that were diminished during the pandemic, such as travel and event costs, continue to return to our cost structure in the quarters ahead, which will impact operating expense growth. Our estimates for Q3 adjusted EBITDA reflect our revenue guidance and our expected level of investments, resulting in a range of $100 million to $120 million for Q3. Thank you for joining our call today, and we will now take your questions.
That concludes the prepared remarks for today's earnings call, and we will now begin the question and answer session. To ask a question, you may press star then 1 on your touch-tone phone. If you are using a speakerphone, please pick up your handset before pressing the keys. To withdraw your question, please press star then 2. In the interest of time, we ask that you please limit yourself to one question. After your initial question is asked, your line will be muted. At this time, we will pause momentarily to assemble our roster. Our first question comes from Doug Anmuth with J.P. Morgan. Please go ahead.
Thanks for taking the question. A question for Jeremy. Average eCPM was up more than 120% year over year, related to higher demand and ROI, and then also product and geo mix shift. And I realize eCPM is an output for Snap and not a pure indicator of the prices that advertisers are paying, but we've also heard a lot about price inflation across the online ad market. So just wanted to get your views on whether you think there are any risks around price inflation and how you think about sustainability going forward.
Sure. Hey, Doug, it's Derek speaking. I can take that one on the CPM question. You're right. We did observe rising eCPMs in Q2. They were up 122% year over year. And we do think of eCPM, at least in part, as an output metric at this stage in our growth, and we expect that it could fluctuate as our business evolves over time. That said, in Q2 in particular, we did see rising eCPMs driven by several factors. One of them is just the rapid rise in the overall advertising demand we've experienced, which is up 116% year over year. And mix shift towards higher eCPM products is also a factor here, such as dynamic ads, the revenue from which doubled sequentially in Q2. And then we do see mix shift across some regions, with North America growing at a relatively higher rate as well. Over time, however, there are several competing forces, many of which we have influence over, that can put downward pressure on eCPM, including, one is the growth in our overall community, and we've seen this accelerate in recent quarters with global DAU reaching 23% growth year over year in the most recent quarter. Second, there's the potential to expand our inventory opportunity by expanding to monetization of highly engaged areas within our application. Examples include the camera, and given that our app opens to the camera and our audience creates billions of snaps per day, the inventory potential of the camera is already immense. So we're investing heavily in our capabilities to capture that opportunity, as you can see with our recent product announcements and acquisitions and so on. Spotlight is another example, and it remains early days for this new platform, but engagement has grown rapidly, and we're excited about the potential for Spotlight to expand our ARPU opportunity over time. And the map is another really good, similar sort of example of an entirely new revenue opportunity with very attractive levels of engagement and the opportunity to serve as an on-ramp for a new audience of advertising partners over time. Last but not least, we've been investing really heavily in our ad product and optimization capabilities in order to deliver our goal-based outcomes for advertisers, such as pixel verified purchases, as efficiently as possible, which allows us to expand our inventory opportunity. And then, look, lastly, I hope all of that would give you a little bit of a framework of how we're thinking about this evolving over time, as these dynamics play out. So hopefully that gives you a little more context. Thank you.
Our next question comes from Brian Nowak with Morgan Stanley. Please go ahead.
Great. Thanks for taking my questions. I have two. First one, just on the strength of the ad business in 2Q and then with the 3Q guide, I'd love to sort of peel back for any more detail on the product level drivers of the ad business. What is sort of seeing the most incremental momentum between lenses and AR versus stories versus Discover versus anything else that I'm missing? That'd be super helpful. Then the second one, Evan, just on AR shopping, talk to us about sort of where you think you've made the most progress there, and then in your mind, what are sort of some of the key hurdles and friction points you need to overcome from an execution perspective to really realize that opportunity?
Hey, Brian, thanks so much for the question. We're really happy, actually, with the products across the board and the adoption. So as Derek spoke to, we've seen a robust increase in just overall demand of our innovative ad formats and improved self-service model, which has very much enabled us to scale demand globally. To be specific about your question and the products that we've released over the last 3 years that continue to see strong growth, it's really in dynamic ads, down funnel GBBs, with examples being pixel purchase and app purchase, commercials and shows and games, and then in self-service AR as well. So again, kind of runs the gamut there. But additionally, we continue to invest in ads measurement and optimization, which is the most important thing for us because it helps us derive outcomes more efficiently and increase yield, but also increase performance for our advertisers. This particular flywheel is why we're so excited about our future potential across all of these products as we scale our advertising business. And I will let Evan take the second part.
Hey, Brian, thanks for the question. We're super excited about AR shopping. In particular, we're focused on apparel and accessories. It's obviously a huge spending category for young people, but more importantly, it's a real opportunity for us to differentiate. So if you think about the in-store experience in a changing room, that's not particularly pleasant, and at home trying to shop online and find the right size and, scroll through thousands of little tiles of models wearing clothing, none of those feel personal, and none of them really capture the experience of trying something on, which is so important for consideration with apparel and accessories. So AR can really solve this problem in an interesting way. There are some places where I think from a product perspective, we have solved the technical challenge. So trying on a pair of shoes or a watch, sunglasses, those are all areas where today we see really great results for retailers, and that's where we're focused on scaling. So, helping people create and manage their 3D models and make sure that they can easily turn them into lenses. And then there are other problems that we're still working on solving. So, for example, trying on a t-shirt and making sure the cloth looks really realistic and drapes over your shoulders in the right way. That's much more complicated to do from a technical perspective, and we're making good progress there, but it's not perfect yet. So I'd say, what we've tried to do is focus on the areas where we've got a great technical solution and the product works and delivers results. And of course, brands are seeing success with the lenses that they're creating. And then we're making much longer term investments with things like fit analytics to find the right fit and the right size with all of our efforts around clothing try on. And we released some really great new features in Lens Studio 4.0 recently that help, get us part of the way there. But it may take a little longer for full on apparel try on. But nevertheless, we think AR is going to play a really important role. There's lots of stuff we can do to scale today. And you may have seen some of our efforts to make, our beauty AR lenses more scalable so that we can ingest someone's entire catalog of beauty SKUs and help people try them on really easily through Lens Web Builder. So, a lot of effort to reduce friction and make it easier to scale, and then a lot of really exciting technical and product opportunities for the future.
Our next question comes from Rich Greenfield with Lightshed Partners. Please go ahead.
Hi, thanks for taking the questions. I've got a few. First, and they'll be quick, there's huge advertiser demand for Spotlight, which sort of replicates the TikTok and Facebook Reels, sort of user mechanic. What's holding you back from starting advertising within the feed, especially when ads are already being created in similar, sort of form factors on other sites? Two, Story Studio, I know you announced it at the Partner Summit. It hasn't launched yet. Curious, I guess for Evan specifically, how do you think it's going to change the quality of the content on Snap? And maybe even since it can be used for any, app, how do you think it sort of leads to the use of Snap content across the broader mobile web? And then just a last piece for Jeremy specifically, curious, what are the key building blocks you need ad product-wise to drive small and medium businesses to advertise in much larger numbers? Like what should we be looking for in terms of your ad products or tech stack that needs to be done to really ramp those numbers? Thanks.
Hey, Rich, thanks for the great questions. Yeah, as you pointed out, we really pioneered that vertical video format with stories, and of course now use that format in Spotlight. And so it's something that I think will transition to monetization really easily, and of course leverage our full ad stack and all of the optimizations and measurement capabilities that we offer today. We've done some, small testing with advertising in Spotlight so that, we're ready when we want to turn on. But for now, we're just really focused on the core experience. There's so much opportunity there. We've got a great roadmap of improvements, and we just don't want the team to get distracted, frankly, with monetization at this point when there's so much upside in the core user experience and core user engagement. So we've chosen to focus on the product experience for now, and then, over time we'll think about monetization. But, we're testing and learning, so we're ready when the time comes. And then, when it comes to Story Studio, I'm so glad you asked this question. It's something we're really excited about. if you think about the core Snapchat camera, we're always optimizing it around communication. So we want it to work really, really quickly. And oftentimes that means we don't offer some of the more sophisticated creative tools that you might want to use when you're making the perfect video, and maybe you want to spend 20 minutes really perfecting the transitions and the text overlays and the audio and things like that. And so what we wanted to do is create a separate application, Story Studio, to really focus on some of those more fine-grained editing use cases to help people make really beautiful videos. And we think they're going to use them in a bunch of different ways after they create them, of course, contributing them to Spotlight, or even to make stories for Discover. So we don't know what folks will make yet, but it is a really great opportunity for us to invest in great creative tools. And over time, we may invent new creative tools in Story Studio and bring them over to Snapchat. So it's a great new way to experiment with video editing, and we're really excited to get it out there.
And hi, Rich. Thanks for the great questions. As always, I will take the small, medium business question. So specifically as it pertains to small and medium businesses, I think one of the things that can kind of get conflated is that talking about local, or is that talking about e-commerce and app install, et cetera. So I'll give you an answer kind of in two parts here. But the first is really the small and medium businesses as it pertains to app install and e-commerce, so digitally native businesses to be specific. We believe that we already have a lot of the tools focused on measurement, ROI, that flywheel that we talked about in the last question in terms of optimization and ensuring that people get results when they use things like our goal-based bidding strategies. And those products are already in place, but we believe that we have a significant opportunity with the smaller growing companies in this particular space. And then looking longer term, we believe that the Snap Map and public profiles for businesses will be really key features to unlock growth in the local SMB space, different than the e-com and the app install businesses, but we're still really, really early on in this particular journey. The good news is, though, that Snapchatters are starting to interact with local businesses organically on the service. So as we improve the utility of those core services, we're going to be investing in more local specific advertising products, but we're not there yet. So that's what you should be looking for.
Our next question comes from Ross Sandler with Barclays. Please go ahead.
Hey guys, Evan, just a question on engagement. You noted that time spent watching content is up overall, but it's down for user stories. So is that from less mobility, or is that being cannibalized by the Spotlight engagement? And do you think you can grow both areas in tandem, or should we expect that dynamic to continue?
Hey, Russ, thanks for the question. I think the best way to think about it, Spotlight's not going to be purely incremental, but so far what we've seen is that it's largely incremental. And the reason why we think that is because Spotlight and Discover, in our Stories products, are really different purposes. So what we're seeing is that Spotlight's a great way to discover new content, to find creators you've never heard of before, or even someone who just submitted a really funny snap that they created. And then Stories is a much more high-intent product. So people, make friends and want to see exactly what their friends are up to, or they've subscribed to their favorite publishers. And so what we're really interested over time is actually the relationship between the two. So people might discover new influencers, new creators in Spotlight, add them, and then go view them on Discover. So I think you're right. It's not going to be purely incremental, but so far it has been largely incremental, and we're really excited about the long-term opportunity for us to evolve the relationship between the two. So Spotlight's really opened up a whole new canvas for us, to explore this way of distributing content and actually help people find things that frankly are pretty hard to find today on the Stories page.
Our next question comes from Mark Mahaney with Evercore ISI. Please go ahead.
Thanks. I'll throw a couple questions too, please. One on Spotlight. Your level of investment in continuing to incentivize content, do you expect to keep that at roughly the same level, or do you think you've reached enough critical mass where you don't need to incentivize content? Secondly, could you talk a little bit about monetization of maps and where you are versus